Okay, I just wanted to introduce a very simple, easy to follow bounce play strategy. It's just one of the strategies we employ in our chat room. HDY, for example, if you look on the message boards up until today, you see HDY is done. You see HDY finished. You see all kinds of comments about HDY. They had a secondary offering on this day, and it just got killed. 10 million shares. I think the offering was at $3, and it still couldn't get a bounce even down here. So now you've got this big red day, and then a couple other days where it was just weak. It just couldn't get any kind of bounce. Even had kind of a little bear flag right there, and then continued down the next day. This landed it on our bounce play watch list, where most people are talking about HDY's finished, and here comes $2 and all this. Now I don't know where HDY is going to end up, but it doesn't cost you anything to have HDY on your watch list. And one of the things I look for is that after this sell-off, it's had several days in a row where it could not break its early high. What I mean by its early high is the high that it puts in the first 15 or 30 minutes of trading. Actually, one day it did in the final minute of trading, it bursted up, but I'm not going to count that. So we had this on Bounce Watch in our chat room, and I'll add in today's candle, and you can see it sold off some more, probably sucking in some of those people that think, maybe they're reading the message boards and they think HDY is going to go to zero because it's gotten hit so bad. All right. These are late shorts in my opinion, and we had this on long watch, even though it looked like there's nothing pretty about this chart. Matter of fact, when I called it today, one of our newer members said, why HDY? And it's a valid question. There's nothing bullish about this chart. Switch to 30-minute candles. This is what I like to do to determine if I like a bounce play. Okay, 30-minute candles. There's the day. There's the high of the day that you can kind of see these dashed lines here on the chart. It's kind of hard to see them, but I'll put a little line on each one. That's the dividing line between days. All right. This was the day where they announced the secondary was already selling off, and then here, boom, I think it even got halted for a little while. Okay, so this is the big sell-off day. Here's the opening 30-minute candles high the next day. You can see it never broke its early high. There's the opening high the next day. Now, it did break its early high, I think, by a penny right at the end of the day. I don't really count that. Then here is the next day's opening high, 30-minute candles again. You see it never broke that early high. I like these stocks to break the early high in the afternoon too, by the way. There's the next day's opening high, sold off all day, and then here's today's opening high, and then it comes up and gives a nice base below the high of the day. Now remember, when it's down this beaten up and hasn't even broken its early high, meaning its 30-minute high, for 4 or 5 days in a row, and then you get this nice base with the high of day just to the left, the early high of day. This is a pretty good setup for a long idea. Now, we also, playing this two different ways, we also nibbled here at 234. Our second entry in HDY as a swing. We nibbled the other day. We like to average down, and I never average down in a day trade, but our swing trade, we've had pretty good success with it, and we start with what we call 1 unit, and then the next buy is hopefully lower with 2 more units, and so on all the way till we have a full 10 units. And so we did average 2 more units today at, I think it was 234, I think, and it gave us an average, because we had 1 unit the other day in the 250s, gave us an average of 242, and so we're already green on the swing trade as well. But back to the day trade, and there's the tight base, and this is what it looked like when I called it in chat. I said for a day trade, this is irrespective or a different account that I use for my day trades than my swing trades. I said this is not related to the swing trade ad that we did right here earlier, 234 right there. I like this for a day trade as a base break. In other words, 239, worst case stop, 235. So I'm risking 4 cents. You can go in, and it had enough volume where you could take some size. So when you're risking 4 cents, you can go a little bigger. And 239, when it got there, I grabbed it. And remember, 241 would be an afternoon break of its 30-minute high. Should get some shorts to cover, the shorts that have had fun with this thing as it went down. So there's the 239, 240, and then it gets through the high of the day. We get a few high of day prints, and volume comes in, short starts to cover, and the very last 5 minutes all the way to 250. Now, that doesn't seem like much, but a quick dime in 15 minutes on a $2 stock is a 5% move. So anyway, I did sell all my traders into this spike. Had a nice little afternoon trade, nothing huge, and we still have our swing position with an average of 242. So anyway, it's a simple concept, but when you have something down that many days in a row, usually, sparked by some event like a big sell-off day, they're worth keeping on watch. Look for an afternoon break of its early high, especially if you get a tight base like HDY. You can get a pretty nice little trade in some of these. So it's a simple trick, but it's one of our methods in our chat room that we employ all the time. All right, I'm not going to babble any further. We'll talk to you guys later.